Welcome to It's a Numbers Game. I'm Adam Morris, and while I'm currently away soaking up the sun in Madeira, the show must go on. So, my co host, the ever insightful Daniel Welling, is flying solo today. But he's joined by a fantastic guest, our resident accountant, Chas. Together, they'll be diving into the key highlights of Rachel Reeves' budget and breaking down what it all means for MSP owners. You'll learn what didn't change in the budget and how that provides stability for MSPs using pensions and corporation tax planning, the three biggest changes impacting MSPs, and practical steps MSP owners can take now to optimize payroll, mitigate costs, and stay ahead of tax changes. So I'll leave you in Dan's capable hands, and I'll see you next time.
Welcome to It's a Numbers Game, and thanks for joining me. We are a week on from Rachel Reeve's first budget, slightly less eventful than the quasi-Kwarteng budget of a few years ago, but happily I'm not having to do a full assessment of it myself because I'm joined by our resident accountant, Chas. Chas, welcome to the show.
Thank you, Dan. Thanks for having me.
And so, Chas, you've been for the last 7 days or so eagerly reviewing all of the notes that were released along with all of the headlines. And there was a lot of anticipation for this budget. And there was a lot of topics that were talked about that would be included. Perhaps we could kick off with what hasn't changed that we thought might.
Yeah, I think in the weeks leading up to the budget, there was a lot of speculation or rumours that it was going to be quite a sort of aggressive budget in terms of tax changes. So, yeah, it's worth looking at things that haven't changed initially. So one of those is the corporation tax rates. Obviously, last year or the year before, they did change quite a bit in terms of we had that flat 19%, which was then changed to this 19 to 25% rate, which was dependent then on the profits that your company generated. So there's been no actual changes there. So that's all as and was. So that's that. And then we had some rumours about there's going to be changes to the pension legislation in terms of the contributions that you can put into a pension. Obviously, company directors can use pensions quite effectively to mitigate corporation tax liabilities. So there's been no changes in the amount you can actually contribute to mutual pension in a tax year. And also on the flip side of it, there's been no changes to the amount you can withdraw from pensions, being the 25% tax-free rate. So all in all, some of the changes they could have made, they haven't touched, and those ones would have actually had quite a big impact on businesses and individuals alike.
Good to hear. And certainly I know the pension contribution mechanism is what widely used and therefore very MSP friendly in our community. So that's good to know that that's remained unchanged. Certainly no worse than it was. Hopefully it will improve more so over time. So those are the sort of key headlines that didn't change. Perhaps you could walk us through 3 of the biggest changes then, starting with the first.
So the first one I would say, rather than actually a change in the tax rates, it's more of a change to the cost base of business owners, i.e. employers, because the national minimum wage is going to go up in April. And normally we have a sort of minimal sort of increases, but this year it's actually going to, or next year, it's actually going to go up 6% above inflation. So it's worth bearing that in mind, that although we're looking out for how the tax rate is going to increase, that is going to be an additional cost that if you have got employees that generally are around that minimum wage mark, then that's going to have to be factored into your projections for next year in terms of what effect that would have on your overall costs. So yeah, although not as tax as such, it is going to be a cost, an additional cost to businesses. That's worth bearing that in mind. I'd say number 2, again, it's probably not a change in the rates and allowances. In fact, it's the opposite. And you could suggest that it's a bit of a stealth tax because there's not really been any announcements on it. But it's been worth bearing in mind, obviously, each year inflation does increase, and it's been increasing more aggressively over the last few years. But the allowances or the tax allowances that everyone gets has not changed. So it's a bit of a sneaky one, really, because there's no headline there. So they pass over it, no changes to the allowances, and everyone thinks, okay, great. And no news is good news. But actually, what that means is the more and more people are going to be drawn into, firstly, the basic rate of tax, where they might have been under the personal allowances before, and secondly, into the higher rates of tax, and the 40 and 45% rates of tax. And at the moment, I believe there's a record amount of people falling into those higher tax bands, and um, uh, they call it a higher rate of tax. But sometimes you probably argue that with the current costs and everything like that, these are not wealthy people. They just sort of normal workers, NHS workers, or employee really, but just been falling into the higher tax bands. So it's just worth bearing that in mind over the next few years. Those rates are static. So more and more people are going to be dragged into those bands. And therefore, although the rates aren't changed, you are in effect going to be paying more tax as an employee. So yeah, that's the number 2 one.
And I,
And number 3 one.
and I guess just on that, it's worth noting as well that with cost of living, well, inflationary pressures on spending of those gainfully employed within the MSP market, they're going to be spending more, they're going to be paying higher tax, which means that salary increases that the MSP owner might be making are actually not necessarily going to have as much of an impact on the sort of money in the pocket of the average MSP employee at the end. So, as you say, it's a stealth tax, but also a stealth cost to MSPs that perhaps they were thinking of a 5% increase. Well, maybe that needs to be 10% to give the same net effect to the employee in their take home.
Yeah, absolutely. I mean, the employees are really only interested in the take home, and they're only going to want to see what's ends up in their bank account at the end. So yeah, definitely that's a valid point. Okay, so the third change, I guess, biggest change is probably the sort of headline one that they announced is the change to the employer NI rates and allowances. So this has increased from 13.8 to 15%. And also they put the threshold down, which is the amount at which your employee has to earn before you as the employer have to start paying employers NI. Previously, it was just over 9,000. Now it's been sort of almost halved to 5,000, which means more and more employees or employers will have to pay employers NI. That said, there is some good news on that front, because they've also increased the employer allowance, which is the sort of credit you get against any employer NI bills. So previously it was £5,000. So your first £5,000 of employer NI bills were basically wiped off. That credit has been increased now to 10,500. So it gives, although more people are going to be caught by it, there's a higher allowance that you can use as a credit to offset those employer NI bills. So in summary, there are going to be some winners and losers with these changes. Now, if you've got a smallish business with not too heavy a payroll cost or number of staff members, then you're probably going to be better off. We've done an exercise just recently for one of our clients. So there's 2 directors, 5 employees, and they will actually be £2,000 better off a year with the changes. So for those sort of employers, you're probably going to be better off. And that is probably going to be the vast majority of small businesses who will generally have smaller payrolls. But if you do have a larger payroll, more employees, or you pay higher wages, then you probably are going to see a negative effect. Now, it all depends on the number of employees and the amount you pay them. So it's difficult to put a specific number on whether it's going to affect you or not. It's just a case of running through the calculations. But yeah, although the headline sounds bad, it's actually probably beneficial to a lot of the small MSP business owners that are out there. So worth bearing that in mind.
And maybe I can put you on the spot then and just ask a question around, you mentioned the threshold at which employers NI now applies. I would certainly know that a lot of MSP owners pay themselves a basic salary to effectively register for but not attract national insurance, which is roughly 9,000 and something. And will that change have an impact on what a typical MSP director's basic pay might be?
Yeah, and there is some potential tax planning opportunities around that. So, in specific circumstances, you might want to even, although you'd think that actually is, you might as well reduce the director's salary. So, there is no employer NI. Actually, probably increasing the wages could have an effect on the eventual corporation tax rate that you're subject to. So, for example, if you find that your company is falling into transcending that 19% and falling into some of the other tax bands, then there could be some planning around actually increasing the wage, using up some of that plus potential unused employer allowance, and therefore pushing the company's profits back down into one of the lower tax rates. So it's very specific because it's going to depend on the number of the profits you're doing in the company and how the employees have already used up your employer allowance. So there is a calculation to be done there, but definitely there's some definitely figures to be crunched and thoughts to be had around that. Yeah.
Okay. All right. So that's really interesting. And again, I know a lot of MSP owners would do like an annual payroll for themselves, perhaps in March. So this change affects this tax year, or is it from next tax year?
Yeah, that's most of the time with most things, although there is exceptions, they tend to give you a little bit of notice. So yeah, it's going to be starting from April 25.
So normal routine up to March this year, and then consider the change from the following year. Okay.
That's right. Yeah.
There's one area that probably caught my attention, which you've not mentioned yet. And again, there's lots of topics we could gone into, but that's around for those MSPs that are considering a disposal of their business. So we've had changes to business asset disposal, and perhaps you could just talk us through some of those changes and when they would apply from.
Yeah. So obviously, the three ones that I mentioned are probably and I say the biggest, is probably the ones that have impact most people in their sort of day to day, year to year, month to month cycle. But yeah, if you're in the position where you're either looking to sell an asset or sell a business, then the changes to the CGT taxes is going to potentially affect you. So, in summary, basically, they've aligned the CGT taxes for um, asset sales, with those of property sales. So, in effect, you've now got an 18% basic rate CGT tax, and you've got a 24% higher rate, which is the same as the property sales taxes as well, which is a bit surprising, really, because although they have increased some of the taxes on property sales and landlords, etc., you'd think they're the ones they're after, and actually, it's almost as though they're going after the business owners or the asset holders. Maybe it's because they're expecting a lot of crypto sales, so they want to cash in on that, possibly. I don't know, but yeah, it's all been brought in line now and increased. So interestingly, the effect of these changes, so the increase from 10% to 18%, which is a fairly decent increase, takes place immediately. So for those who are thinking of doing a quick sale, to take advantage of the lower rate for the moment, they're putting a spanner in the works of that. So yeah, they're going to be stuck with those new rates immediately. There's also been a change to the business asset disposal relief, which was the old entrepreneurs relief, where basically if you're selling a business in effect, then rather than pay the higher rates of CGT, you've got a special rate of 10%, subject to some qualifying conditions, and that 10% is now increasing to 14%. Now, that one isn't immediate, so that is in April. So there is some potential, if you were in the process of having some discussions about selling a business, then it might be advantageous to try and speed some of the discussions up, because there is going to be a 4% hike to that rate April. So yeah, changes there. So the motivations, who knows? But yeah, there is some changes which will affect those people that are going to be selling businesses or any other assets.
And just for our listeners, CGT, capital gains tax, and the business asset disposal, that goes to 14. Does it then go up again another level in the future, or is that to 14?
Yeah, so although it's increasing to 14% from April 25, they are planning also increasing it further in April 26. So obviously these things can change, but the plan is at the moment that it increases from 10% to 14% and then again to 18% in April 26. So yeah, they're definitely looking to align these capital gains tax rates to the other rates that you have. So the advantage of the business asset disposal relief compared to your normal CGT relief, although it's still there, it's not quite as generous as it was before.
Yeah, and a sort of tapering off over a couple of years to hopefully not create a rush to sell or indeed a barren period thereafter. Although I guess in real terms, if we're talking about had you been enjoying the benefit of £1 million of entrepreneurs business asset disposal relief, I should say, before you'd have been paying 100,000 on a million. From next year, you'll be paying 140,000 on a million, and from the year after, you'll be paying 180,000 on a million. So yeah, therefore you've got to factor that into negotiating your sale price, and perhaps make
Yep.
another 40 or another 80 on the on the deal.
Yeah, definitely. I mean, whenever there's tax changes or projected changes, then these can have ongoing changes to the negotiations. Although there is a sort of cut-off, so if contracts are agreed prior to certain times, then you can potentially sort of have the old rates. But it all depends on how the contracts are agreed. Yeah.
Okay. And there is, though, a limit, though, isn't there, in terms of business asset disposal, like a lifetime limit that you can use that benefit?
Yeah, there's a £1 million limit. So if you're a serial entrepreneur who buys and sells businesses and likes to take the benefit of the percent rate or the now increased 40% rate, then there is a limit. So they will limit you to that £1 million.
Um, yeah, perhaps Rachel had heard about all of the M&A activity in the MSP space, and that's the target they're after, but maybe not. So I guess to sum up then, what actions should the typical MSP owner be taking at this point? Like, what are the immediate takeaways?
So in summary, I'd say, first of all, probably, unless you already do, it's always a good practice to do a forecasting or a budget. Obviously, you're going to have to factor in the additional costs of the minimum wage increases and potential increases in employers' NI, depending on how big your payrolls are. So for starters, that's always a good point to look over. And I mentioned it before anyway, but you're probably going to want to possibly do some projections on what your director salary should be set at and whether there's any benefit in increasing it. Now, there's going to be lots of variables there because it's going to depend on what your current personal tax return looks like, whether you're already a high rate taxpayer or if you're trying to keep yourself under those high rate taxes. But in summary, if you're just, for example, if you've got a 70K profit, you're going to be pushed into the marginal tax bands between 19 and 25%. So if you was to increase your director salary by taking advantage of any unused personal allowance, you could potentially knock yourself back down into, or your company back down into the 19% corporation tax band. So those calculations are worth doing. Obviously, you can get the help of your accountant, or obviously you can approach us, but there could be some opportunities there to look at.
Very good. And of course, a shameless plug from ourselves would be our Profit Protector tax diagnostic audit, which effectively is a non-committal workshop with yourself, Chas, looking at what the tax position has been, what it's likely to be, and I guess identifying what could be done to optimize the amount of tax paid in the forthcoming period, and indeed what you could have done differently in the last year.
Yep, definitely.
Good stuff, and we'll include a link to that on the show notes. So if anyone's interested, they can read a bit more about it on our website. So, any final thoughts, Chas, in terms of overall our view on the budget? Good, bad, indifferent?
Well, I think the weeks leading up to the budget, it seemed as though there was a bit of a bit of fear mongering going on, in that everyone was really worried, and the government was giving all the sort of tunes that you're going to be taxed left, right, and centre. So I think it was a case of just to prepare everyone for the worst, and then when we give some bad news, everyone will be relieved and we won't look so bad. So I think, in summary, it could have been worse than it actually was.
We've been managed here, haven't we? You
Yeah.
get that
So
feeling, yeah. And I guess one final thought from me is, obviously it's not just the MSPs that are affected by this budget, it's all of their customers and the wider economy. So maybe any hesitation in decision making that might have affected either project signing off or decisions being made to change from one provider to another. Hopefully now, with the budget behind us and the dust settled, that can enable a productive trading period between now and the inevitable slowdown in the weeks up to Christmas. But now's a good time to get busy and get that pipeline closed down, I guess. Good. Chas, really appreciate your time. Been a pleasure talking to you. And when's the next budget? In the spring?
they normally have a spring budget as well. So I'm sure we'll look forward to that as well.
And hopefully they've not listened to this episode and getting any ideas about how to make more changes against the MSP community.
Let's hope so.
Good stuff. Chas, thanks ever so much.
Thank you, Dan.